Now, the UK's biggest fund manager has beaten estimates. Aberdeen Asset Management announced underlying pre-tax profit more than doubled to £210 million. Its revenue for this year is £638 million, up by half from last year. So joining me now to look at these earnings and the state of European markets in general is Aberdeen's CEO, Martin Gilbert. Martin, thanks very much indeed for coming in. So I actually want to start. Good morning. So I actually want to start by asking you how your Asian and emerging market funds compared to those in the US and Europe.
Yeah, we've had fantastic performance, especially in those two areas, Asia and emerging markets. And we're one of the best-known emerging market asset managers in the world, as well as Asian. So we've had a fantastic time, and flows coming in. The flows are still flooding in, actually a bit too quickly for us, and we've had to close to new business in both those areas. So we're still seeing that trend continuing.
And there seem to be signs of overheating in China's economy. That's certainly a concern in the market as the government attempts to rein in inflation. How much of a concern is that for you?
Well, we're very concerned about China overheating. We also find it quite difficult to make money in China. I know that sounds a strange thing, that one of the most buoyant economies in the world, and it's very difficult to find the stocks to invest there. So we tend to go through Hong Kong. But certainly we would like to see China just slowing a bit from the growth it's got at present.
And how does Europe's performance compare to those?
Well, certain countries in Europe are doing okay, obviously, Germany being a good example. So some of the countries are in good shape, and the UK is in better shape, I think, than people perceive. But then, of course, we have the outliers who are not doing as well as everyone, as Asia. But Asia's the place, obviously, and emerging markets to make money.
You mentioned the UK. Are you concerned that the UK economy won't be able to maintain the pace of growth that we've seen over the past few months?
Well, I've always thought the UK economy is doing slightly better than estimates, just from living in Aberdeen, obviously, which is buoyant, London, which is buoyant. But there is more concern next year now than there is this year. But I don't think the UK's the basket case that, say, some of the other economies or the other banking systems are in Europe.
And how concerned are you about that? With ongoing concerns about sovereign debt really playing out in global markets?
Yeah, I think it's all manageable, and I'm pretty sure the euro will survive as well as the European market. But obviously it is a concern with certain of the countries there, and you just need to look at the yields, as you know, on their sovereign debt to see what people think the risk is of various economies.
Positive outlook for equity markets?
Yeah, I think so. I mean, I still think that people have got to invest their cash somewhere to survive and have enough to live on. So I think the obvious place to put it is equity markets and bonds, perhaps high-yield bonds and emerging market bonds. Those are other areas that we like.
So from what you're saying, the bailout of Ireland, ongoing concerns about sovereign debt not being contained in Europe, has that affected your clients' appetite for risk? I
think our clients have been putting an enormous amount of money into as I said, Asian equities and emerging market equities, because they perceive that is where the growth is going to be in the future.
They don't bother with Europe at all?
Well, I think Europe's very attractive at the moment. European large-cap stocks are really looking good value. And, of course, a lot of them have very, very big emerging market businesses. So
some good buying opportunities out there.
Tremendous, yeah. I think large-cap Europe is good at present.
And about your business, any plans for further acquisitions, given you've made at least, what, 8 in the past 5 years?
Yeah, no, we've decided to concentrate on organic growth, because we tend to buy in difficult markets. So we bought the Credit Suisse business, the Royal Bank of Scotland business, and now I think we're seeing the benefits of those business. And we'd really like to strengthen our balance sheet, build up the cash balances, and take it from there.
Are you not tempted by rival fund manager Gartmore?
No, I don't think so. No, we'll leave that to some of our colleagues in the asset management industry.
Okay, Martin Gilbert, Chief Executive Officer from Aberdeen Asset Management. Thanks very much for coming in.